Hi guys, how are you doing? Welcome back to the stream. We would be having really important datas these days, and on Friday we are having a wonderful stream of datas coming out, and that would be bringing a lot of panic in the market. So it would be a wonderful time to be active right now and to analyze stuff. So we would be looking at every single thing from the fundamentals to the technicals, and I would try to make it as short as possible. But if you guys come, you can ask the questions in the chat. I can pin that. So the data which we are having, it starts from like 3 a.m. that is the Eastern Standard Time, and it is a New York time. So before we head into this all of this data, we can actually, I want to show you something. So at 7:30 p.m. on the Eastern Standard Time, we have Tokyo Core CPI yearly, and it is 2.4%. That CPI is just known as inflation in a simple term. So it is really important that the the CPI for the Tokyo was 2.4. That brought a lot of volatility in the yens today, and a lot of push that happened. So this is what I wanted to show you guys. But let's see that what we are having out here. We would be having German GFK consumer climate. Then for the pound, we would be having the retail sales monthly. Really important data out here coming for the pounds for the retail sales, because the forecasted value is quite different from the previous one. So we might see a big negative number as based on the forecast. And if it happens like that, and if the number is like quite different from the forecast, and of course, like if the forecast is so bad, we might see, as compared to the previous number, that a lot of volatility could be induced in the pound. So really important data out here for the pound on the retail side. Retail sales data. Then we have a current account data that is also forecasted on a little bit different. You can see that there's a big bit of a gap. We're gonna like check in detail that what is that, but I can tell that it deals with import and exports. And then a final GDP quarterly data for the pound is coming, and then good trade balance data for the pound, really important data as well. And then revised business investment quarterly data is coming for the pound, really important data as well. Then we have a French consumer spending monthly data, and then a French preliminary CPI monthly data. So this is consumer spending data on the monthly level for the French, and French preliminary CPI inflation data for the uh, France would be coming. It would be impacting euro. And then we have a CHF economic barometer data that is coming out. We would be looking into that as well. And then we would be having the Spanish flash CPI. So really important as well would be like putting the impact on the euro, because it is the yearly CPI data that is coming out. So then we would be having a German unemployment change, really important data as well. Again, unemployment change data, you can see the difference is a lot, and this would be showing that the how the euro is actually reacting to the certain changes that are happening in the world. Then we have Italian 10-year bond auction, and after that we would be having the Canadian dollar GDP monthly, really important subject right now to discuss after the tariffs. Then we have the US core PCE index, personal consumption expenditure index, really important data that is coming out. Not much of a difference right here, but let's see if there is a difference that actually could be incorporated, then things would be like really uh, volatile in the market. Then we have like a personal income on the monthly data, then personal spending data monthly. For the USD personal spending data, we can see right here a big difference. Like last month the spending wasn't as great. This month things are looking bit better. So let's see how the data would be. We would be looking into all this stuff. Then we would be having the uh, Euro German president speaks that would be coming out, and this German president speaks would be based on this unemployment change as well, and that would be bringing some of the different, excuse me guys. So then we would having a revised consumer sentiments, really important data that is coming out from the University of Michigan, and it is basically a survey, but not much of a difference. So seems like the dollar might be more on the stable side um, tomorrow. No, I mean like today. So it's right now it's like 12:08, means like new day has begun, and then we would be having the FOMC member speaks, and 3 at 3:45 p.m. we would be having FOMC member speaks again. So the perfect time to work is actually starting from like 3 a.m. Eastern Standard Time to around about like 12 p.m. Eastern Standard Time. We would be having a good amount of volatility, and we would be like witnessing good moves. So if you join the stream, we can like actually continue with more understanding, and you guys can like are most welcome to actually ask questions, and like we can discuss pairs, and it would be a really interactive session if you actually show up. So let's jump into each and every data out here so that we can actually see what each and every spec means. So German GfK consumer climate, it is the level of a composite index based on the surveyed consumers. So it deals with the index that is based on the consumers, and the survey is about 2000 consumers, which asked the respondent to rate the relative level of the past and future economic conditions, including the personal finance situations and climate for major purchases and overall economic situation. So financial confidence is a leading indicator. It is also known as consumer sentiment. So financial confidence is a leading indicator for consumer spending, which accounts for majority of overall economic activity. So it is also like a consumer sentiment data that is based on surveyed consumers. About 2000 consumers are questioned about that. Then we have a retail sales, really important data for the pound, guys. Pound gonna like literally shake everything today. So the change in the total value of inflation adjusted sales at retail level. So these are the changes which are incorporated with the inflation at that actually shows that how the sales went at the retail level. So it is like a primary gauge for the consumer spending, which accounts for majority of overall economic health. And we can see the difference that usually like on in the Jan and December and November the data was negative, and after that you can see that the data was positive in Feb, and again data might fall back to the original place. So most likely it could be like a, a thing that based on like Christmas and the New Year shopping, things might have like boosted up the actual data, because if it's coming for this month, so it might be for the previous month, so it might be representing the previous month, and in that case seems like things changed in Jan a little bit. Then we have a current account. So it is the difference between the value difference in value between imported and export goods, services, income flows, and unilateral transfer during the previous quarter. So it is a quarterly data that comes out. The release is about 85 days after the quarter ends. So this is like coming around like 4 times a year. Really important. A good portion of has no impact because it duplicates the trade monthly trade balance data. So it is like linked with the trade balance data, and then it says that it directly links to the current demand. A rising surplus indicates the foreigners are buying more of the domestic currency to execute transactions. So it deals with import and export, but we can see that actual is greater than the forecast. So we can see that data has a little bit improved a little bit from minus 18 to minus 16. Then we have a final GDP quarterly for the pound. The changes in the inflation adjusted value of all the goods and services produced by the economy. So it is a broad measure of the economic activity and primary gauge for the economic health. And the previously listed is actual from the preliminary release, and therefore the history data will appear unconnected. So there are like two types of data, and this is like a final one. And then we have a trade good balance. Like a current account, we do have like a goods trade balance. That is a difference between imported and exported goods during the reported month. And similarly, if you see the current account, it is difference between the value of imported and exported goods, services, income flow, and unitary transfer during the previous quarter. So current account basically shows the previous quarter. That's the difference. And this good trade balance is report for the reported month. And export demands and currency demands are linked because the foreigners must buy the domestic currency to pay for the nation's export, and export demands also impacts the production and prices at domestic level. Then we have a revised business investment quarterly data. That is a change in the total inflation adjusted value of capital investments made by businesses and government. So what it actually represents, that the change in the investments that are being done by the businesses and governments. And you can see that it is a leading indicator of economic health. Businesses are quickly affected by the market conditions, and changes in their investment level can be an early signal for future economic activities such as hiring, spending, and earning. So if the business investment data actually improves, it actually means that there would be more hiring, more spending, and more earning. And then we have a consumer spending data for the French. That is a changes in inflation adjusted value of all goods expenditures by consumers. So it is a primary gauge for the consumer spending, which accounts for majority of economic health, and it is a value of all the goods expenditure by the consumers. That is the amount of the money which is spent by the consumers to buy everything out there. So just a sec, guys. Then we have French preliminary CPI data. That is the inflation adjusted changes in the price of goods and services purchased by the consumers. So it is basically the changes in the prices that are being occurred and by the consumers. And then we have a KOF economic barometer, a level of a composite index based on 1219 economic indicators. So see how big this data would be. That would be representing the Swiss, and the actually greater than is good for the forecast. And this index is designed to predict the direction of the economy for over the next 6 months. And combined reading of 1 to 9 indicators related to the banking confidence, production, new orders, consumer confidence, exchange rate, money supply, interest rate, spreads, stock market prices, and housing. And there would be many more. So it covers every single thing out here. So really cool stuff, guys. Then we have a Spanish flash CPI yearly. So as we know that CPI is the changes in the prices of goods and services purchased by the consumers, and there is a two versions that are released 2 weeks apart. One is flash, another is final. The flash release, which source reported in March 2011. It is a source and it is an earliest and thus tend to have most impact. Final is not reported for lack of significance. So the consumer prices account for the majority of overall inflation. Inflation is an important country valuation because rising prices lead the central bank to raise the rates respect for the inflation containment. And then we have an unemployment change, that the change in number of people unemployed during the previous month, and we can see that the unemployment is rising in here, although it is generally viewed as lagging indicator. The number of unemployed people is an important signal for overall economic health because consumer spending is highly correlated to the labor market. And then we have 10-year bond yield for the Italian, that is says that average yield on 10-year bond the government sold at auction, and the bid to cover ratio of the auction. So the auction results are reported in XX/XX format. The first number is the average interest rates of the bond sold. The second number is the bid to cover the ratio, the number of the bids per bid accepted. Source does not give an exact time, and this event is tentative. So yields are set by the bond market investors, and therefore they can be used to decipher investors' outlook on the economic interest rate, on future interest rates. So by the way, like, this bond market is directly linked to the currency, so that's why it deciphers the investor's outlook for the future interest rate. And bid to cover ratio represents the bond market liquidity and demand, which can be used as a gauge to investor confidence. And then we have like a really important data on the GDP monthly for the CAD, that is the gross domestic product, that says that the changes in the inflation adjusted value of all goods and services produced by the economy. And it is a broader economic activity and primary gauge, and it can really affect because it is released after 60 days after the month end. So if it is releasing right now, so it might be releasing for the December. So because it is no, not for December, by the way, it's like March, so Feb and Jan, so it might be releasing for the Jan right now. And then we have a core PCE index for the USD, and it is one of the most important data because it tackles something more deeper than CPI. So the changes in the prices and goods and services purchased by the consumers, excluding food and energy sector. So in CPI we can see that it includes food and energy sector, so it doesn't include. The difference from the core CPI in that it only measures goods and services targeted towards the consumers by individual. So the core CPI actually excludes the food and energy sector, and so the PCE index measures the same stuff but targeted towards the consumers, target towards and consumed by the individuals. So CPI basically doesn't capture that effect. You can see that it is purchased by consumers, but PCE actually deals with consumed by the individuals, so it is more deeper. Prices are weighted according to the total expenditure per item. Prices are weighted according to the total expenditure which happened per item, which gives important insight into the consumer spending behavior. And CPI is released 10 days earlier, and it is a Federal Reserve's primary inflationary measure. And inflation is an important to the currency valuation because the rising prices leads the central bank to raise the rates. And secondly, I want to like bring your attention to something really important here, that it is actually based on the items. See right here, expenditure per item. So it deals with on the really basic level. So if you see CPI here, it doesn't based on like the items, but PCE based on the items. Really important data out here. And it is released about 30 days after month end. And then personal income, the change in the total value of income received from the sources by consumers. And income is correlated to the spending. The more disposable income consumers have, the more likely they are increase the spending. So then we have a personal spending, the changes in the inflation adjusted value of all expenditures by the consumers. So it is inflation adjusted number one, and it is the expenditure by the consumers. And it can also deal with what PCE expenditures. So it is kind of like a proxy for the personal spending is a proxy for the PCE index, and this is a significant data through it tends to have a relatively mild impact because the significant data, though it tends to have a relatively mild impact because retail sales, which also covers consumer spending, is released 2 weeks earlier. So it accounts for the overall economic activities, and it is important gauge for the economic health due to the vast ripple effect on the consumer buying creates in the economy. And then we have German Buba president speaking, and he would be discussing inflation expectations, realities, implication, last mile de-inflation, and the Dutch Bank president voting members of ECB governing council January 2000 believe that he is one of the most influential member of the, so it's like their own stuff. But they would be looking at like the economic eurozone key interest rates and their public engagement and all that stuff. And then we have University of Michigan consumer sentiments, the level of composite index based on service consumers, and the previous listed and actual. So there are like two datas, and it's really important to see that 15 days apart. The first one is preliminary, another is revised, and preliminary has more impact. The financial confidence is a leading indicator of the consumer spending, and which accounts for the majority of economic health. And 800 respondents are asked to the relative level of the current economic conditions by University of Michigan right here. So then we have inflation expectations as well, the percentage that consumer expect the prices of goods and services to change during the next 12 months. So how the things of the prices would be changing in next 12 months, it actually shows that. And it also has two versions, and expectations of the future inflation can manifest into the, so expectations about the future inflation can show us the real inflation. And primary, because the worker tends to push for higher wages when they believe that prices will rise. So if the prices of things are rising, so of course there would be things that lobbies and all the unions would get active to increase the wages. And survey of 800 consumers which asked respondents where they expect prices to be in 12 months, and how much rise in the goods and service prices would be expecting. And then again FOMC member speaks, which would be showing the interest rates and public engagement and on the monetary policy side. So these are the data that is coming, and literally like this is all CPI data representing the inflation, consumer spendings, and everything. So for the pound, we would be having the same stuff right here, the retail sales, that is basically inflation adjusted sales that happened on a retail level. So it would be also representing the same stuff for the pound. So really important data, guys. I hope you understand the importance of it, and if not, and if you're like a technical trader, so if you don't look into this stuff, I think that is quite foolishness. So let's see, the hot news is what are out here, that Trump tariff U-turn have FX traders cuts best on the big swing. So I think they are trying to say is that trader who bet sharp swing in US 7.5 trillion a day foreign exchange market surrounds Donald Trump last two tariff deadlines are taking new approach as US President vows an April 2nd trade reckoning. Expectation for the volatility in option tied to trade sensitive currencies such as Canadian dollars, euro have really important by the Bloomberg, by the way, guys. So Bloomberg is like most efficient source out here even to study this stuff, and we can say that traders who bet sharp swings in US Donald Trump in last two tariff deadlines are taking new approach, and we can expect in Canadian dollar and euro a lot of volatility. This is what Bloomberg saying, and then their strategic person is saying that it becomes clear that the trader prefers to take a wait and see approach to the tariffs given a series of false starts. So this actually shows that maybe like the big players are trying to like wait a little bit on the April 2nd, because in April 2nd there is something special going to be happening, and then Trump tariffs are making ECB interest rate path more complicated, policymakers says. So this is something point to be noted, because interest rate, whenever the keywords like interest rates, policy rates, and all this stuff comes up, it brings something new out here. So it is from CNBC, really important source. The US President Donald Trump tariff policy are making the path ahead for the European standard central bank interest rate more complicated, according to the member of the ECB governing council. We are going in the right direction, as I was actually quite relaxed, he told CNBC also on Thursday. So then there is another hot news that all the way with Friday PCE inflation and spending data may discourage investors. So this is from the Morning Star, and they are saying that the Federal Reserve's preferred inflation gauge for the, as I discussed, that all the data for the US is based on CPI. So inflation gauge for the February may end up looking out of date, while consumer spending could do little to improve overall weakness for the first quarter. The next major inflation update is set to arrive on Friday in form of Federal Reserve's preferred measure of the prices gains for February, and there are few. So they are saying that there could be a little bit of a boost on the consumer spending, and then we can actually see what are the most viewed, that the impact of US tariff hike starts to appear in macro data. So on the trading level, they are saying that the US tariff hike starts to appear. Early signs of the effect of the US tariffs are being to show up in the international trade data. So with US imports surge in January as the business sought. So all the way the Friday PC spending may discourage investors. So they are saying that maybe that like the PCE index data might be coming bad, and then the Trump tariff U-turns have FX trader cut the bets on big swings. We have discussed that. And then US gross domestic product fourth quarter and yearly and GDP. So the US domestic product fourth quarter and year 2004 estimate third by GDP by industry and corporate profits. The real domestic product increased at an annual rate of 2.4%. So the GDP for the for the US was a little positive that they are talking about that. If the Trump is saying that if the European Union works with Canada in order to do economic harm to US large scale tariff. So and secondly, I also saw a post that there from the Financial Times, by the way, that the president of the prime minister of Canada is saying that they are breaking up their friendship with US. So the Trump, we need Greenland for international security, so he's looking at Greenland as well. And are the continued jobless claims a useful gauge for the market labor conditions? Of course it is. So there's an article on that. And what are the latest stories? Let's refresh it if there are more. So set up for the escalation, the European Union response to the US tariffs. Interesting. Our first set of the Trump tariffs has hit the European Union, and it is probably not end here. The European Union would prefer to make a deal and prevent trade war. So absence of an agreement, European leaders may react to any tariff imposition by the US. And after hitting Canada, Mexico, China with the country specific tariffs, President Trump raised US import tariffs on the steel and aluminum to effect 25% on March 12th. So he did that on March 12th, and our raw material as well as steel and aluminum content of a long list of product. And Trump signed an order to raise the import tariffs on the auto to 25% from the third. So seems like situation is escalating. And similarly, Fed is saying that US economic outlook is cloudy, and Federal Reserve should be patient in adjusting interest rates. So really important stuff out here that they are not expecting. So what I mean by that is that we can only extract the scenarios out here. So in the third estimate of the fourth quarter GDP growth, while there was some movement under the surface and economic growth quickened. So it is about GDP, and then Tokyo inflation. So this is what I was telling you in the start, that we had CPI for the Tokyo. Really important stuff. It's from Yahoo Finance, really credible source. The cost of living in the Tokyo rose more than anticipated from the previous month, keeping the Bank of Japan on track for further interest rate hikes. Consumers spending excluding fresh food 2.4%, early inflation in the processed food escalation. Okay, the result was more than a median economics forecast. So the yen's, this is important for us. Overall inflation also picked up from the yen's temporarily gained against the dollar. So yen got stronger with the good inflation data in which came. And this is their monetary policy summary, and it is directly from the Bank of Japan. And Japan is saying that the BOJ's summary of opinion is saying the one member wage increases in spring wage negotiate slightly surpassing previous year, and nominal wage increases in line. And then member believe that it is best to maintain the current policy steady for a while. And so it's like their own thing. So it is like we've discussed this. So this is what the post I was talking about, and it is saying that United States is no longer credible partner. This is what the Canada's Carney Prime Minister is saying. And then IMF assessing the Trump tariff plans but does not see a US recessions. So it's like a mixed approach right here. So I hope I know this stuff is boring for much of the people out here, but of course to analyze the market, you can't like directly jump and see that this gonna go up or this gonna dump fast, so we have to like actually build up the concept first. So and then it says that US 10-year yield holds steady ahead of PEC data. So the yield on the US 10-year Treasury note held steady around 4.35% on Friday, hovering near 1 month high as the investors awaited the latest PCE index report. The Federal Reserve's preferred inflation gauge and Federal Reserve Fed increasingly raised its inflation forecast, citing the concerns. And then we have the Bank of Japan will continue to raise its policy interest rate. So they are also thinking of raising their interest rates, and it's just the monetary accommodation of its economy. And the central bank stressed the need of the flexible data-driven decisions. And so the board will closely monitor the U.S. administration policy and impact the global market while assessing the domestic reactions to 0.5% policy rate. So they already have like 0.5%. So recently a downside risk of the US has escalated the potential tariff issues posing threat to the economy. So whenever there is a threat to the economy, of course the rates would be affected. So BOJ may adopt a caution approach towards the further rate hike, and at the next meeting, the policy will hinge on the firms and household inflation expectation emerging upside the risk of the prices, wage growth, and BOJ remains committed. And so this is what the data was like: 2.4 inflation percent yearly on yearly inflation has came for the Tokyo from 2.2%. And this is the fifth consecutive month that the core inflation remained below the Bank of Japan. Inflation remained above the Bank of Japan 2% target. So usually the 2% is the best, but this time it's like 2.2%. So the US economy expand. This is really important. We have the GDP data tomorrow as well for US. So US economy expanded an annualized 2.4% quarterly 2024, slightly higher than 2.3 previous estimate, primarily reflecting a downward revision of to the import. And there is the increase in the GDP was a decrease in the import in the US. So this is what they are trying to tell. And exports fell slightly. So then anticipated from 0.5% negatively to minus 0.2%. And government expenditures on the other hand rose a little bit. And so guys, that's it. I think on the fundamental side made me enough clear. I hope it would also make you clear. So just give me like few minutes, half a minute, just so that I can like regather the strength and we can work on the charts. So let's look at some of the charts around here, that is DXY first. So while looking at DXY, I was most probably like expecting a good breakout from this point. So let me make the line clear. So this was the point where I was expecting that the prices would break out, and prices did break out from that. But eventually what happened that yesterday we did see a move on the downside. And the reason for this downside move was mostly based on the USD final GDP quarterly data, and although it was a bit astonishing, the good trade balance also raised a little bit. That might have pushed the prices on the downside, but we saw what we see, so we can't debate in front of why the market did that. But then let's look into that. So as the break was expected, and it happened, but later on the prices went down, pushed on the upper side a little bit, again went down there. But the good part is that they are holding around this order block. So now we can see that the prices are trying to push on the upper side again. Let's see how the things run, because there's a mixed amount of data out here. And if we see the current scenario out here, we can see that the PCE index is almost about the forecasted is around about same, except there are differences in personal spending right here. And so it is so right now it's March, so it would be for the Feb, the personal spending data. So this is how the DXY is currently looking. A good break, a pullback, holding this order block around here. Holding the order block around here might build the strength even to continue on the upside, but if it shows the failure around this point, something like that, I would be much happy to see it going on the downside further. But right now it's really in the range, so there's nothing we can tell right now. I hope you get the understanding. So USD CAD, as we know that CAD is a biggest concern for the tariffs right now. So we did had an order block here, prices reacted around there, prices reacted again around there, we got a break around here with this big candle, prices pulled back a little bit and can continue further on the upside like that. Let's see how things run, although right now the CAD was a bit stronger. So we can see that a little bit of a bearishness coming in there based on the dollar, but let's see how things react, because there was a good breakout from this point. So it's a range formation right now. Anything above it or below it can take the prices in any direction. Then we have a Swiss. You can see that USD CHF has given us a forced touchdown here, and it's in the ranging right now, really a confused state. Let's see how the breakout occurs around this point. Might happen tomorrow. Then USD JPY. So with this is the candle with when the yen CPI actually came out positive, pushed the dollar a little bit on the downside, but right now seems like the level is holding. Then we have Euro USD right here. So if the dollar rises, guys, so we might see a reaction further on the downside like that, bringing the prices on the downside. And most likely it can happen, but let's see, guys. I can't say it for sure, because we would be having the tariff stuff out here. And Euro GBP right here, representing that the pounds actually got stronger here, and then prices started moving on the sideways, building up this channel. So We would be having a pound data by the way at 3 a.m. today, and Euro GBP would be the first thing that would give us a reaction. And if we see the pound data, we can see right here that their retail sales are coming really negative than forecast, and if this happens, we can like literally see that euro GBP would give us like a good pump on the upside. So let's see, because technically there is something really cool happening right now. See, this was like a peak formation low, and prices like kind of like pushed on the upper side, then prices came back down again, unable to break on the lower side. You can see right here the prices are not closing below this wick, and literally like we can get a good pump on the upper side, and this time the prices can go on really high. I would be like looking for a long position in Euro GBP. I want to like literally note it down because it's something. So you should also note it down, because we have studied that in detail right now, so much likelihood. Then pound Aussie right here, we can see that the pound Aussie after like creating this double bottom around here, and after breaking this neckline, gave us direct move on the upper side. So let's see if the Aussies get stronger or not, because there is nothing for the Aussies today. So with the pound, Aussies might get affected. So if we might see this type of reaction, a small pullback and then continuation on the upper side. It could be like a really wonderful opportunity if we able to like get it. Similarly goes for the Euro NZD right here. Wonderful opportunity each and every time. See, prices went up, came back down, went up, unable to break these lows around here, still holding this level. Something really beautiful, and then move on the upper side, and much likelihood of a breakout. Man, just this could be like the most easiest trade out there. I am looking euro to be long, like only the minor pairs by the way. And then we have like euro CAD. We can see the reaction right now. Although euro made like this peak formation low, really beautiful move around here after formation of this doji textbook trade pattern right in front of you guys. So prices are pushed on the upper side, and much likelihood is that if the euro gets stronger, we might see a pump on the upper side further. So because these are just a range right now, maybe like because of the time or something. Then euro JPY, we can see that yens are trying to, because of course yens had like a CPI data, so a little bit of a reaction in as compared to the euro here. And then Swiss is also getting stronger and pushing the euro on a little bit on the downside. Pound started getting affected already in the pre-session, because in 2 hours the London session would be opened, and then of course at 3 a.m. we would be having the data. So London session wouldn't be opening at 3 a.m. So I'm talking about the Eastern Standard Time. So at 2 we would be having a Frankfurt open, and we can see the reaction already started to like happen, that we might see a negative retail sales. So we might see a clear push on the downside for for the GDP. So I would love to like stay awake and take my chances here. GBP Aussie right here. If the retail sales data comes really negative, guys, we can actually expect this move around here. So most probably like we would be having that if there is forecast. NZD right here given us no pullback around here. Something really cool by the way happened, that NZD was so weak that GBP pushed on the upper side right here, and we might see a direct move on the downside like that if the retail sales data is not good. And GBP CAD right here pushing a little bit on the downside for the strength in the CAD. Then GJ gave us a little bit of a reaction. By the way, guys, GJ is on a wonderful spot right here on this order block right here, and we can see this reaction happening right now. It can give us like a straight move on the downside. Let me show you how. If it breaks around here, pull back a little bit, it can give us like a literally a big fall. So much likelihood I would be interested in specifically on the retail sales in 2 hours. And then GBP CHF, it can literally go on the downside if we see right here, although like the Swiss has been like in a good ranging position right here, can give us a move like that. Then AUD USD right here. Aussies by the way got really weak today, and all of a sudden we can expect the prices to continue on the downside further. So this was basically the zone right here which I'm talking about. This is, by the way, I'm looking at AUD NZD. We can see that this is the low formation, this is the low formation, this is the low formation right here, and then prices broke out, went on the downside, formed this W pattern around here, pushed on the upper side. Although I was expecting that NZD would get weaker and we can expect a move, but of course AUD also got weak, so we might see a upwards reaction around here. Prices can push on the upper side like that. So much interested in this setup, by the way. For a bullish move. And then AUD CAD, as we know that CAD is gaining a little bit of a strength, we can see a reaction on the downside. Similarly, AUD JPY gave us a downside move with the CPI of the yens, and AUD CHF we can see right here that oh, by the way, it's a beautiful setup. Let me explain you. Right here prices was on the downside, a little bit of engulfing failed, prices came back down here. Now this is our time. The prices went up, failed to break on the upper side, gave us this move. Any sort of pullback, we could have entered around here and taken our profits around there. So similarly, NZD USD giving us a move on downside. NZD CAD, really a wonderful opportunity if for the position traders here. But we have like a CAD's GDP tomorrow. It's like a CAD GDP tomorrow monthly, so we might see a little bit of a pullback and then can expect a continuation on the downside further. And similarly, NZD JPY right now, there's a momentum has slowed down with the yen CPI here, and then of course CHF pushing on the downside. Then CAD JPY here, we can see a little bit of a strength that is gathering up in here after this breakout. Let me make it more clear. After this breakout, prices came back, retested this level, pushed on the upper side, and formation of this range. Much likelihood is that it can continue on the upside until unless yen start working on their interest rate. So yeah, CAD CHF, we are looking that although like this was like more based on a 1 hour time daily time frame trade, this is the trade I executed, and it was more based on the bullishness. Right now let me show you how. So overall trend was like on the sell side, but the way the momentum was building around here, see the breaks were happening. This was a break that happened, this was the break that happened, this was the break that happened, and then this was the break that happened. And after that prices came back up, a little bit of a pullback, and I was expecting a continuation on the upper side and could give us a really good potential. I just even shared that, but this trade is right now running. Prices here are holding around this point, and let's see if we can get a reaction on the upper side directly on the CAD's GDP. So if not, of course, then it's a stop loss. And but overall the scenario was mostly in the bullish side, and let me explain that in the daily time frame right here. So let's be unbiased right now because this is the trade that I've executed. So you can see right here that this is a good peak formation. Let me show you something else as well. So this is the liquidity that was taken from this point, and after liquidity taken, this was the range, and this is the range right here, and this is the price where the prices tried to like get into the range back, but we can see the reaction that happened, the rejection that happened, mostly because of like a fundamental aspect of it. But there's another thing that if the prices for the GDP tomorrow for the Canadian dollar gets really good, we might see a good boost on the upper side, and either can make or break right now. That's the kind of a scenario which I'm looking at, but I'm quite hopeful the way the CAD actually opened today. And then CHF JPY, similar structure, a little bit of a move on the downside based on the CPI for the yens, and that's all, guys. It make enough sense to me. So what about you guys, and how do you think that the fundamentals gonna impact in the market? Really amazing setups out here. So I have taken a position, but just wait a little bit. Like I would be waiting for the position to be closed out, or either give me the a reaction on the positive side, but much willing to trade specifically on the pound today, because we do have like a good clear signal right in here that you can see the amount of the decrease that might be happening in the retail sales. So if this number comes positive, you can't even imagine what would be happening after that. So we can actually wait for that. So I hope it makes sense to you guys, and by the way, do support the stream, and if you ever like feel like I'm just like guiding you really good and deserve some gift, so my PayPal is attached, so don't even hesitate. so that I can like actually be more confident next time and look come with more preparation for you guys. So any questions out there? I can wait for a little while. Okay guys, then take care. Seems like there are no questions.